Turn back to those trade headlines now. President Trump saying the U.S. is, quote, immediately terminating all discussions on trade with Canada. In a surprise announcement, the president citing what he called the egregious digital services tax. Joining us now to discuss is Treasury Secretary Scott Bessent. Mr. Secretary, it's great to have you on Overtime. Welcome.
Morgan, good afternoon.
Let's start right there. What happened with Canada?
Well, we knew it was coming. We hoped they wouldn't do it. Canada has this digital services tax, and several other countries do too. We disagree, and we think that they discriminate against U.S. companies. But what Canada did here, as of Monday, they're going to implement a retroactive tax. And we think that we don't like the taxes, and obviously we think it's patently unfair to do it retroactive. This was something from the Trudeau years, so we were hoping as a sign of goodwill that the new Carney administration would at least put a break on that during the trade talks. They seem not to have. President Trump has responded, and my inclination is that Ambassador Greer over at USTR will be starting a 301 investigation into the digital services taxes to determine the amount of harm to the U.S. companies and the U.S. economy in general.
Why is a Section 301 investigation the way to go, and what could that outcome potentially yield? Would that be broad-based, looking at Canada and the possibility of tariffs, or very targeted on certain industries?
Well, no. The president can impose tariffs based on IEPA, which is an Emergency Economic Powers Act. The 301 is more durable and could last longer.
So in terms of 301 being more durable and lasting longer, would this be more broad-based, looking across trade of goods and services with Canada more broadly, or would it be more targeted to certain industries?
No, it would be targeted across tariffs on Canadian products. And, you know, again, we'll have to see. We know the amount. I think it's about $2 billion of retroactive digital taxes, which seem patently unfair. We had been talking to the administration in Ottawa about this, and they decided to go ahead with it.
The European Union is doing something very similar in terms of a digital services tax. How is that factoring into negotiations there?
Well, no, that's not right. The European Union does not have a digital service tax. Several countries within the European Union have digital service taxes. None of them have done those retroactively, and we're in active discussions with them to take those down. Because again, who has the great internet companies of the world? It's the United States of America. So it singles out our great American companies.
So Canada, possible escalation depending on how this plays out over coming days. De-escalation, though, and that was the news of the morning with China. What are the details of this China trade agreement?
Well, it's a continuation of the Geneva Agreement, and the centerpiece of it is that we agreed, and it's away from the tariff measures because the tariffs came down immediately after Geneva. Post-Geneva, we had an agreement with the Chinese government to start the flow of rare earth magnets again. They were not as forthcoming as we had hoped that they would be. So the U.S. implemented non-tariff countermeasures against the Chinese government. We believe that the rare earth magnets are starting to flow again under a licensing agreement or a licensing regime that the Chinese government implemented on April 4th. And when we are certain that the magnets are flowing again, we will drop our countermeasures.
So a lot of speculation out there about whether this July 9th deadline for trade deals is a hard line or whether there's some flexibility. Is there flexibility?
Again, it's going to be up to President Trump. We're going to follow his lead. What I would think is going to happen is there will be a lot of smaller trading partners. We will just send them letters. There will be a group of deals that we will land before July 9th on or about. And as Secretary Lutnick said yesterday, he believes there are 10 or 12 of those. And then there are probably another 20 countries where they could go back to the reciprocal tariff of April 2nd as we work on the deal, or if we think that they are negotiating in good faith, then they could stay at the 10% baseline. So there are a lot of moving pieces here. A lot of it is based on the consistency of the negotiations. And again, it will all be up to President Trump.
Historically, trade deals have taken years sometimes to craft. It's incredible how quickly you're moving here when you're talking about 10 waiting in the wings and perhaps another 20 behind that here in the next couple of weeks, just to put it in context. Another thing that seems to be poised to move quickly here, at least in the next couple of days, is the Republicans have reached a tentative deal regarding the state and local tax deduction, SALT. At least that's what we're hearing. That had been a sticking point. My colleague Emily Wilkins is reporting there are a few other key topics still being worked out. But can this big, beautiful bill make it to the president's desk by July 4th?
I think there's a very good chance, and the only way to get there is for the Senate to start voting this weekend. I think I was just with the Senate Republicans, and I think they're going to start voting tomorrow.
Do you see potential roadblocks here over the next week?
Look, nothing's done until it's done, but President Trump's leadership has gotten us here at what people thought would not be a possible date. Leader Thune, Speaker Johnson have done an incredible job of holding small majorities together and getting the bill moving forward. So I'm optimistic we could have a July 4th signing.
What does the bond market need to understand about this bill, what it's going to mean for government spending and the debt load?
Again, it is the largest cut in discretionary spending non-discretionary spending in history. And the other thing, too, is what do we care about? We care about growth. We care about spending. So if we can stabilize the spending and up the rate of growth, then that's how we start stabilizing the debt to GDP, this terrible situation we had. The deficit to GDP, 6.7%. We'd never seen anything like this when we weren't at war or in a recession. So, this was a peacetime deficit. So we are going to slowly bring that down in a methodical way, and we will stabilize the debt to GDP level and start bending the curve down.
Interest rates are still elevated, even as the dollar continues to weaken against other major currencies. Do these market moves concern you?
Which market moves?
What we're seeing in the dollar as it weakens and the fact that interest rates are still elevated here.
The couple of things are, Morgan, is I'm not sure why it would concern me that it's natural for currencies to move around. I've traded currencies 35, 40 years. So, currencies move up and down. The U.S. still has a strong dollar policy, and we're putting the economic factors in place to continue that. On the other hand, we are seeing for the first time a real attempt at defense spending in Europe. We're seeing the Germans take off the debt brake. So, more fiscal spend would tell you that the euro should appreciate.
If we stick with rates, and particularly here in the U.S., the Fed was slow to respond to spiking inflation a couple of years ago. We know the president's been very vocal in criticizing the Fed chair. Is it the president's concern that the Fed is behind the curve again?
Well, not my words, but the president's. He calls Chair Powell too late Jay, and so he's obviously worried that the Fed's behind the curve again. And Morgan, I would just point out that studies have shown that people who fall down then tend to look at their feet, which makes them fall down more. And the Federal Reserve fell down on the American people in 2022, let the great inflation get away from them. They should have been hiking sooner. So maybe that's what we're seeing here.
There's a lot of market chatter emerging right now about the possibility of a shadow Fed. How disruption would the nomination of a new Fed chair this far out from the end of the term of the current one be for the market?
Well, look, I don't think anyone's necessarily talking about that. There will be two seats opening, or there will be one seat definitely opening in beginning of the year when board member Kruger leaves And then the chairmanship will open up in May when Chair Powell leaves. So Chair Powell doesn't have to leave. He could stay on the board, not as chair. So there is a chance that the person who is going to become the chair could be appointed in January, which would probably mean a October-November nomination.
Your name has been floated in some media reports as a possible replacement for Fed chair come next year. Your response, is that a job you'd consider taking?
Look, I'll do what the president wants, but I think I have the best job in Washington. We're making meaningful change, working on the president's agenda every day. I get to work closely with the president. I think that, as I like to say, we've done peace deals, trade deals, and tax deals. We spent the first 100 days setting the table on those. Now we're going to be landing all those over the next 100 days. So I think that's going to be pretty exciting.
All three of those we've been talking about this week. Finally, the idea, and I think this is really key, and it kind of brings us back to the beginning of this conversation with trade and tariffs, but this idea of higher inflation tied to tariffs. Case in point this morning, we haven't really seen it show up in the hard data. The Fed and Wall Street economists think that that's something that's going to materialize this summer. How are you and the administration gaming this out and thinking about this inflation dynamic?
Well, look, as you said, it hasn't played out, and we're seeing very low numbers. And forget imported inflation, because if we were to get it from tariffs, which has not happened, it doesn't have to happen. That's a small part of the inflation calculations. What we're seeing is service inflation drop. I think we're going to see the rent component drop, and the overall housing component, which is implied owners' rents, drop. So the Fed's measure of supercore inflation is way down. PCE year over year is down. So it looks like the trends are quite good. We're at a 4-year low in gasoline prices, so we're going to have a great summer travel season. And Morgan, one thing I heard you talking with your colleague earlier when they talked about the April tariff panic. So we found out today this episode from April 3rd to today is the fastest bounce back after a 15% decline in S&P history. Fastest bounce back ever. So, the administration doesn't look at the stock market every day. What we try to do is set in place economic fundamentals, and presumably the market had a chance to digest the panic and is looking forward. So, I think it is telling you that the tariff panic, or as I like to call it, tariff derangement syndrome, was overdone. We're seeing earnings growth. We're seeing a good path for interest rates. So, I think the economy is looking pretty good.